And thank you so much for joining us here for another episode of Market Talk on this Monday, December 20th. We are in the home stretch to Christmas. I wish you and yours a Merry Christmas and Happy Holidays. Thanks for joining us once again. I'm your host, Jesse Allen. Find us online, markettalkag.com. That's our home on the web, markettalkag.com. All of our streaming sources are there. The latest news of agriculture and much more can all be found online, markettalkag.com. Well, in the face of a broader risk-off trade on Monday, ag markets fared pretty good. It was an overall strong day, I would say, compared to the rest of the commodity sector as we kick off this holiday shortened week. Let's talk about all of it. Let's bring in our good friend John Heinberg with Total Farm Marketing joining us today. John, good afternoon to you, sir, and Merry Christmas. I know it's a busy week, typically a quiet week in the markets, and we got a little fireworks today with the outside trade. But man, ag markets held in there strong. It was a good boxing match today, I would say.
Yeah, it was. I mean, the outside markets were difficult. Crude oil down as much as $3 to $4 a barrel one time during the course of the day. Stocks pushing 700 points lower on the futures at least one time during the course of the day. Things firmed up a little bit here towards the end, so at least maybe saw a little bit of buying step in. Obviously, what's the focus has been a little bit on the Omicron variant and how things are breaking out in Europe as well as here in the United States. Does that cause some concerns on the demand side? Secondly, too, it's just that time of the year. Markets are thin in terms of trade. Are we starting to take a little bit of profit off the table, moving to the sidelines here? Typically we see some of that as we get in towards the end of the year, and that could be some of what's going on here, especially with the holiday here on Friday. So shortened trading week. Most people have already kind of punched out. There wasn't a lot of activity in the markets in general today. But again, like you said, it was really nice to see at least the grain commodities kind of hang in there today and show some decent strength overall, even though corn did finish a little bit on the lower end.
Yeah, I think overall I was very, very happy. You mentioned corn kind of finishing on that lower end, and even though still firm, and this corn market, just that overhead resistance at $6, that just continues to be the culprit. It seems that's really holding this corn market in check, John.
It has been, and basically we go back to Friday, and we put in a new high for the move on Friday, taking out that high from the 24th of November, and then even the last trade on that day was our highest to close in the March corn contract since June. So there are some positive things that are coming together here, and even today, we pushed down 3, 4, 5 cents lower, and you could just see those bids kind of kick back in towards the end of the day just to kind of finish this thing out down a couple pennies. So there's still some money flow. We're kind of tagged to the 590, 595 window in March right now. So we'll continue to see how that kind of plays out. We're still basically on an uptrend here and still very strong overall in terms of buying support. Just sure if we need some news here to get us through that 6 barrier. Maybe we have to wait till after the first of the year. We'll have to see. Maybe we have to wait till after the January numbers start coming together. Maybe this market gets a little cautious going into that. Just not seeing if there's that motivations there to go ahead and put that 6 on the board in front of these grain contracts.
Now, on the flip side, soybeans, you mentioned it, the strongest market of the day, I would say, beans and bean meal. And, with crude oil down over 6% today, bean oil going with that. But that helped out that meal oil spread once again here, that crush spread. And it really, we saw oil the leader for a little while there. And now we flipped that script once again. And meal is kind of leading us to the upside here in the soy complex, John.
It has been, and whether that's a weather story tied to what's going on in those South American forecasts, that's still probably going to be the biggest focus of the market going forward. More January, February probably the key, obviously, than now. But that drier bias is staying out there. And again, Argentina is a major producer of soybean meal. They're already down on acres compared to history, this year. So anything that would reduce their crop, but to just help out that soy meal demand, possibly here in the United States, even more so. And like you said, it's become the backside of that meal oil spread. Now, meal's had a nice breakout here. It's raged strongly higher since basically mid-October when those two markets kind of flip-flopped and did the inversion on each other. Bean oil's been down strongly and meal's been higher since that window. Now, basically, oil does act a little bit like the crude oil market. And when we have those weekdays in crude oil, I think some of that's a tie to biodiesel on the road, but at least we're starting to see some action there that soybean oil market trades more like an energy market than it does an actual ag commodity. But it's starting to look like a bit of a value. We still got a lot of good demand for soybean oil. We had two sales last week to India on bean oil, as well as, keep looking at the edible oil picture could still be very supportive. So, it might be one of those things where now we've had our run through bean oil to give us some strength in beans. Now we're getting a run of bean meal to give us some strength in beans. And maybe that's going to shift back over the other way again here too, as that spread between the two, like you mentioned, has really flip flopped around and has now gotten pretty doggone wide.
John, what do you make of this wheat market here on Monday? You and I were talking about this off air before we started. Really nice reversal in this wheat market today, and really found some good strength, especially in the winter wheat months. I know spring wheat's still a little selling there, and the small grain side, oats were down hard today. But I was impressed as well with the moves in winter wheat here on Monday.
Both those front two classes of wheat in terms of Chicago wheat and winter wheat had nice moves off the lows today. I was looking at the March Chicago contract, low of 57, 757, finished out at 777. Still trading 20 off the low, and same thing in that winter wheat market as well, coming well off those lows by 20 cents. So there was a little bit of buying down there. Again, maybe we're just continuing to reject these lower prices. You go look at the global demand picture, it is still extremely friendly for wheat. And this might be a window here where producers or end users are stepping in when we get some breaks on price. Throw in some of the weather concerns that are out there, especially for the southern plains. We obviously had basically the land hurricane or the derecho come through again last week and caused a lot of issues. And those areas are going to need some moisture for that crop to recover from some of the wind damage that it took on. Again, still maybe overall isolated, but at the same time, it's just another tighter supply, type mentality, as it's still early in that crop. But add those things in. Again, there's still just some concerns in this wheat market that could elevate prices. Now, maybe we're consolidating here. This is 3-4 days in a row now where we've kind of hung around this, what we call the 100-day moving average, ping ponging back and forth on that. We continue to kind of build this out, might be building a little bit of a bear flag. So we'll have to watch for a potential break lower. That could come from some news, whether it's the US dollar moving or something on the demand side that's a little bit disappointing. So we'll continue to watch it. But right now, the global prices are still friendly, at least in terms of the supply side of the equation. There still seems to be plenty of demand out there for wheat. We just need a little bit more of it to get here to the United States.
Well, on the demand side, weekly export inspections today were not great. Quart of wheat really not good, and soybeans was okay, but still not enough to really reverse the trend there. As you look at the weekly export inspections, did you see any good news come out of today's numbers?
Now they're a little bit on the disappointing side. Beans at 1.6 million, corn just over a million. Not the best for this time of year. The biggest thing, you'll look back at some of the numbers that are out there for the month of November, as those numbers are getting released today. Reflecting back to what we saw during October into November. Nice jump up in soybean shipments to China in November, way ahead of the pace that we saw in October. Again, just a reflection of how much damage Hurricane Ida probably did in terms of our export market. So that still for me stays as a key going forward, keeping a close eye on that South American weather, what's going to be happening down there. We still got to keep in mind last year they made 138 million metric tons of beans in Brazil. Right now, their forecasts are for about 144 million metric tons. So even with some weather issues and they shave that back a couple million metric tons, it's still going to be a record supply of beans coming at us. And that's something that still keeps me cautious of this market. And maybe we get a bit of a rally due to the weather in January if things do stay dry in southern Brazil and Argentina. That could really open the door for this market to roll over when those Brazilian beans really come online in mid to late spring.
John, you mentioned South America, and I know we're watching that very closely in our market trade, but I know as well the fertilizer issue is really starting to come into focus more. I know back on Friday, Iowa Senator Grassley sending a letter out trying to get the DOJ to investigate. Mosaic is being targeted. National Corn Growers and others are complaining, going after them. Really, just this fertilizer issue is becoming a bigger story as we go towards the end of the year and think about next year. And one has to wonder how much that's really going to play into our decision making for planting 2022's crop, John.
It will. We've talked to a lot of producers that already kind of got some of the decisions in place and got some fertilizers on here in the fall, anhydrous ammonia, things of that nature. So they're they're getting the supply. The concern is when we get to the planning window, will the supply be there? Obviously, the price is what it is. Again, everybody continues to talk about what's going to happen in the acre battle, but talking to people in the core states, not hearing a lot of people changing in that regard. Basically, if you're in good land that can produce a couple hundred bushels the acre, as long as prices stay firm like they are in the 550 window for next year's corn, things can work out. And then from there, you got to manage your risk. So there's still a lot of things. It's a buzz in the media. Obviously, it's a buzz on social media. Not trying to make light of what is actually a price issue that's out there for people. But at the same time, guys are going to still get stuff in the ground as long as the supplies are there. I think that's more of a bigger concern, is just making sure the supplies are there over the price now, as producers are starting to get focused on getting ready to roll here in a couple of months.
I think the other thing too, I love your thoughts on is obviously this is a time frame. This is a week where trade is typically very quiet, very low volume. We won't have trade on Friday. We'll come into next week between Christmas and New Year's, and usually have a low volume week as well. But that means there could be some volatility out there. It feels like we should remind folks not to sleep on the markets here, even though it is the holiday season.
Exactly. When you get these low trading days in terms of volume, that things can move around really quickly because there's just not enough players to step in front of a market and stop it from moving one way or another. So that's always a concern. Plus, again, end of the year liquidation on certain positions. As they square up those balance sheets, they got some good gains out there. They want to move that money to the sidelines and start 2022 a little clean. So that'll be something that comes into play too. So just kind of watch the money flow here over the next few days. They're holding them in terms of the funds, holding a very large corn position. Still very content to be hanging on to that position. Now, beans, they've pulled back their length quite a bit. Still a little bit negative on the wheat side. So there's some room for them to go ahead and move these markets around if they want to pull some money out here. So that makes me a little cautious, corn, because of that large position going into the end of the year. Maybe a little optimistic on the bean side that we could see some money flow from one to the other there just based on squaring up of positions.
John, let's flip over to livestock, talk about those markets here. Also, very quiet trade today, kind of lethargic, which we're expecting. We were down pretty good in feeder cattle and lean hogs, some triple digit losses there, moderate losses in the live cattle trade, but really in the grand scheme of things as well, I was happy with how livestock held up today. Usually we see a lot more pressure there from the outside markets on a day like today. We're having risk off action.
Again, those live cattle market looks like it's on a bit of a slippery slope. The way we traded towards the end of the week last week was pretty disappointing. Get a little follow through today. Obviously, cash trade is not where we want it for live cattle. Saw some softening last week. We got a lot of production, a lot of head, around 120,000 head seems to be the consistent number on a daily basis, but weights are a little bit on the heavier side. So production's heavy in a window where maybe the demand is not as strong as it needs to be. So we've been seeing that choice select spread continues to narrow between those two, again, reflecting maybe that lack of true choice beef demand here, at least in the short window. So with that, prices today, February closed under the 100-day moving average. First time we closed under that since going back to early November. So that kind of makes me a little anxious that this market's got just a little bit more downside, a lot of support around 134. So another couple bucks lower here. But then it might start turning into a bit of a value. We'll have to see how things kind of close out here for the end of the year with next week's trade. We do have cattle on feed report coming out on Thursday too. So that could bring some squaring up of positions going into those numbers. And then we get to sit on that through Christmas and the 3-day week, the couple days afterwards in terms of time frame. So a couple things I'll keep watching there right now. The path of least resistance seems softer for both lives and feeders. Again, feeders, same situation, closing under those key moving averages today, going down and possibly testing trendline support, which is another $3-4 lower.
And I think as well as we go through the holiday season here, and you mentioned just the supply out there, and I think this goes for cattle and hogs. It'll be interesting to see holiday demand, what happens there. We also have the COVID fears with the Omicron variant. How much is that going to start playing into restaurant activity? There's a lot of things I think weighing under these livestock markets as well that could be worrisome as we go into 2022, John.
Very much so. Inflation's a big concerning point. You go look at typically we get a pretty good move in the beef rib during the Christmas holiday season, and that seemed to not happen this year, at least in terms of the retail prices. They weren't just not much of a lift on beef rib. And the thing is, you go look at the store. In fact, I stopped in the local grocery store just the other day. Nice rib was sitting there, and that was over $50 to pick up. That's a pretty hefty price tag when we're already talking inflated grocery prices. So maybe we're at that point in that beef market, at least, where we're maybe pricing ourselves out of the market on the demand side just because of the cost compared to the other meats. So that's something that is a concern to me right now. At least, bringing some of those beef retail prices keep coming down lower, and that can keep some pressure on this market in general. As we still got some good value out there, but maybe we're trying to get things squared up a little bit more with where pork and chicken might be, at least to the retail consumer.
John, how about that dairy market? Catch us up on what you are seeing there as we near the end of the month.
Dairy markets had a heck of a move higher. Again, pushed January milk up into the $20 window, and a little bit over that. And boy, we've taken the air out of that extremely quickly, now trading down close to 19. Again, same types of scenarios happening there as with the livestock trade. Watching end of season demand kind of slow down as cheese prices continue to slide. Hopefully, we can find some support underneath this milk market, probably down around the 1870 window, and I think we'll get our traction there a little bit. But right now, demand is still good overall. I think it's just a little bit of end of year trade here at this time frame. Still a lot of really good value on the chart there for producers to take advantage of. But right now, it's shifting a little bit more on the defensive side, at least going into the end of the year, given the fact that prices are pretty elevated and the end of the year is here. We could see some money move to the sidelines in a market that already is pretty thin on players.
John, closing in on the holiday. Any final thoughts you have for us here on this Monday edition of Market Talk?
It's going to be some couple trade days that could be pretty active. A lot of volatility in it with not a lot of news. I think, again, that's just a reflection of the times. Keep on guard. We do have January options expiring for soybeans this week, and then first notice day for January beans right away next week. So that could bring some movement into that soybean market. Probably keeps us pegged around that $13 level. A lot of open options there that need to either get moved out of or get zeroed out. And markets kind of like to do that. So there's a lot of calls at that $13 window. So I wouldn't be shocked that we just kind of stay choppy around this area, at least get through those through the end of the year. And then we'll sit back and see what this market's really focusing on, whether it's South American weather, cash market, combination of the two, or the acre battle, which is soon to be coming.
Well, we'll have that big January WASDE report coming up too. Not too long after we turn the calendar over to next year. John, appreciate the time as always. I know if folks need some advice, you guys are working through the holidays and everything else, and you're able to help them out and give them some great tips. How can they reach out to you and the team there at Total Farm Marketing?
Sure. Again, love to chat with them anytime. Give me a call at 800-334-9779. Feel free to shoot me an email at johnh@totalfarmmarketing.com. And again, don't forget that website, totalfarmmarketing.com. A lot of great information. We'll have some webinars when those January reports come out. So those are free to producers. Feel free to sign up for those and take advantage of that information for yourself.
Well, John, I appreciate everything you've done for the show here throughout the last year plus, and I know we'll continue to do that as we go into next year. And I appreciate everything again. Merry Christmas to you and yours, and we will talk after the holidays. Thank you, sir.
Sounds good. Have yourself a great holiday and Merry Christmas to everyone out there.
John Heinberg with Total Farm Marketing, our guest today here on Market Talk. That's going to do it for the December 20th edition of the show. Find us, markettalkag.com. I'm your host, Jesse Allen, wishing you a great rest of your day.